Good weekend. Ira Epstein with your financial market wrap-up, and this is our weekend edition where we look at the weekly charts and try to get a feel for where the market has been and where it's going. Now, you know, today was an important PCE indices data. If you looked at the data and dove into it, as I did with my clientele later in the day, you saw that January greatly impacted the data. And then since then, we've come down, but we got sticky. And any way I look at it, you're not seeing this inflation number starting to roll. If anything, it's just sort of stuck where it's at. And we always knew the last mile was going to be in this marathon to get down there, a rough one. And we're seeing that at this point. In simple vernacular, I see no reason for the Fed to make any move at the upcoming FOMC meeting, which takes place this coming week. I think they'll signal that they're not ready. The data is just not there. Some people are saying maybe the Fed will play a little bit with its balance sheet runoff. That could be the wild card. I don't know if they will or won't, but you got to be on the alert for that. So that's where I think you're at. And then, of course, on Friday, we get the new jobs report. And everything I'm seeing does not look like it's going to come out weak. That doesn't mean it can't, but I don't see anything that would even begin to say this thing's looking on the weak side. So I'd be a bit cautious right there. So in the market, we finished up nicely. This is because of earnings. That's what's been coming out. The market's jumping on the AI numbers. And of course, I still think that's really going to help NVIDIA, of all things, for the temporary moment. I was watching today a huge debate on the earnings, in fact, of Microsoft and where they're at about 34, 35 times earnings. And the same with NVIDIA and who would want to own what for the longer pull. Interesting argument. If you're watching the metal markets, you came back in the gold, you lost some ground in the silver. The copper market's in a world of its own as traders, I think, are getting a little ahead of themselves. We know that there's going to be big demand for copper. We know that when the rate cuts come, eventually that comes back into the market. But to get up here into the 460s, I'm not saying it can't go higher, but I think they're looking at the takeovers that are going on in the bid by BHP to get Anglo-American that was turned down, by the way. I think it's bleeding a little too much there. The bounce in the bonds and notes, and that's all I think it was, a bounce in the bonds and the notes. I still like what's going on, and we'll see what goes on with the different parts of the oil complex. So let's start here. On a monthly basis, we're down 3.3%. We're not even at a 5% decline. You normally get pullbacks that are 5% in nature, several a year minimum, and easily a correction, which I call 10%. You look for those all the time, where you get 1, 2 a year in the overall indices in a bull market. That's what you look for. Well, this is just, at this point in time, a fair, not an adequate, if you will, pullback in the market. At least that's my analysis. I was looking and told you this when this whole thing began on a weekly chart, that I thought the first area of support would be the 18-week moving average of closes on a weekly chart. And that's right where the market went, and it held it. So is it still the market acting in a bullish manner? Absolutely. When you come down and you find your support there, you haven't done anything to violate that overall pattern. When you and I look at this chart, we see that the market rolled over, and we see this was an inside week this week. It's not telling us much of anything one way or the other. You've got a higher high, a lower low. We go into the quiet period, and then Wednesday we hear from Fed Chair Powell, and you know that will be every word everybody will listen to in the press conference. I don't look for anything in the statement that's going to jar the market. But I'm going to tell you, I'm aware that the only thing they could pull out of their rabbit hat if they wanted to, and there's no reason to, is changing the pace of the roll-off of the balance sheet. I don't see why they do that just yet. Higher high, lower low, and the market coming into the 18-day average. And, you know, you got up and you kissed over to that upper band, okay, and pulled back. I would just call this right now void of a trend on the weekly chart. You turn down in your momentum. We had a warning sign on a weekly basis. Not here. This was the week of the 12th, the 19th. And it came right in. Boom. You were right at the objective I was looking for. On a weekly chart, it all happened at one time, and you got a bounce from there. Okay. If you take out this low, you could get a pattern of lower highs, lower lows coming down. Now, you have a lot more earnings coming out, but this was a big week. We had 178 companies reporting. So this is where almost, I think, what is that? About a third of the S&P 500 reported in 1 week, and they were a beat. So what's left out there? There's a lot of good companies yet to report. I'm going to look for support overall still in the market. I see a narrowing in of a trading range developing in the weekly chart of the Dow. You went to the upper band. You haven't quite gotten to the lower band. All of the charts are saying that if you take out the lows of last week, not this week, that would initiate lower highs, lower lows, but you'd be getting close to Bollinger Band supports. When you come into the NASDAQ, it's the same thing. You've got the lower highs, lower lows. The market came back and settled over the 18-day average. If I had to give a bent to the market one way or the other, I don't have one. Because you've got the trend down on the swing line and the bias up, I don't know what to do with it. And you've already corrected overbought markets. Overbought happens after you have an embedded reading, and this is a good thing to learn. Here's your embedded reading. There's your powerhouse signal. You've got your market moving up. When you lose that, the first thing that normally happens is you have to lose it by the red line closing under 79. You're instantly overbought. That's what happened there. And now the market's worked off. Past tense, neither number is over 70. So I look at the market and I say, okay, we got ourselves a bounce. In the Russell, upper band to lower band to the 200-day average, back to the 18. Again, no trend for me to work with in that market. Now, in the 5-year notes, what we're doing is we're riding the lower Bollinger Band. One more week of it, we get that gorilla glue trade I talk about as the market works itself down. It's very difficult for me to tell clients to add on to short positions as you ride Bollinger Bands, because one of the objectives is the band itself. It doesn't mean it can't latch on and go further down. Difficult part to play there. In the 10-year, it's very much the same story, but neither are in any manner bullish, other than you might say, at any point they can pop away from the Bollinger Band to the upside. That's the only argument you can make. When you come to the dollar index, you have a lower low, higher high. You need another up week to say it's going to embed. But on a weekly basis, if you remember the report that I gave you, I said the dollar would gain on the euro. I feel very much that is the way that you're going. You tell me which way you see. So the daily charts corrected. That's how you got the bump here, and that's how the dollar had that decline during the week. But as we're now getting along on the charts, now the overall patterns are down. Now here's the problem for the euro. You're down to the 100-day average and the Bollinger Band. That is a major, major support area. So the market, in order to get through that, it's got to do an awful lot of work. It's not easy to do that. In the Canadian dollar, while the daily chart had a nice rally and got over the 18-day moving average of closes, this is no more on this chart than a bounce away from the Bollinger Band. It never did embed. It's correcting, but resistance lies up here at the 74 area in the chart. In the Japanese yen, I don't know what they're thinking there, but they're not supporting the yen. So at first they were going to support 152, they being the Bank of Japan. They talked it up at 154. They came back and said, you better be careful. We're at 157, and there's no support in the yen. The Bank of Japan meeting came and went. They seem to be satisfied, and what they're doing, it's very clear. They're baking in inflation. They're concerned, they being the bank, concerned that yes, inflation has picked up. They want to make certain it stays picked up. They're willing to live with that. So they're importing inflation. Remember, it's a big island. They import an awful lot of goods. And what they're doing at home is as they do that, the inflation number goes up. It gives them an edge with goods because goods priced in yen are via the dollar. You want to have a good time? Go to Japan. I mean, you're going to be going at a historic number, 34 years before you've last seen these ratios. And it's a fun country to visit. And I know my wife loves to go there. Lower highs, lower lows. The market down here lost its bullish way. I can make an argument for the market to pull back to the 56,000 level. I tried to warn people that the bounce that you got off the halving was that it's typically, and I'm only going by the history now of what I've observed. When you get a halving event, you get a bounce, but it's the real impact is seen months later. And that's what I still expect. Yes, you have upside bias. It's very difficult to be short when that's the case. So I'm still looking for the market to leak, possibly back to the 56,000 level. Now, the differential between Brent and WTI, Brent is winning. As you can see, you're breaking out to the upside here. And when you look at the chart, you're still very much on a weekly basis in what? Well, did you lose an embedded reading here? Nope. So you have bullishness off this chart. You fell back to support, in this case, of the 100-day average, and the Bollinger Band's the next target to the upside. If this week's low is taken out, then you probably do lose the embedded reading and get back to 83.51. But until that occurs, the market's got the bulls in control of it. The same is taking place in WTI. You tried to lose the embedded reading. You got a reading at 79.30, but look where you closed, near the high of the week. So if you pop through this week's high, the big question is, does that revert and you start getting back over the 80 level in the WTI? And this was just a correction that says you might be going to the 88 level, the upper Bollinger Band there. In Reebok gasoline, you have never lost the embedded reading. So the way to have traded this market in looking back was this correction was difficult for me, for everybody else. But off a weekly chart, it is not difficult at all. On the weekly chart, this market is still very much in the bull camp until this reading is lost, calling for the possibility of getting up to the $3 level, one of the numbers I talked to you about months ago. So you put it all together, you come up with the game plan, and that's what we do first things in the morning. Now, I did move my morning futures video an hour later. So instead of me recording as I always did at 5 a.m., it's now 6 a.m. Central Time, and it will stay that way. We did a survey of what our clients wanted. So each morning at 6 a.m., I now do the futures. At 9 a.m., I do the ETFs. And on them both, I cover over 40 charts. I'll look at the daily charts and I'll back them up occasionally with a weekly chart, throwing out trade ideas based on 5 technical indicators. I get people that write me, my subscribers. I create short videos, pop them right out to them. It's better than me writing back, no, you don't do this or that, if it's a technical question on a chart. If it's away from the chart, of course, I'll write them back and tell them what I'm seeing there. I devote a certain amount of time each day to respond to the clientele, which is you. So we talk to technicals. We talk to fundamentals that are coming up. We look at trade recommendations, dollar management. What do you do? Long-term trades, short-term trades. Short-term is not day trading, just shorter term in nature. Example, we still have trades on, now this is going into May. We own our NVIDIA from December. That just gives you an example. We own Amazon now probably a month. So looking at where these are going, yes, we play with them. We'll try to hold futures as long as we can. Same thing with the ETFs. And we look at what we can do. We peel off trades, we build them, try to go back and forth. So if you'd like to learn, it's really easy to learn. You go to iraepstein.com. You go to the word research. It explains how this all works. It's very inexpensive. You will spend for a month on a large Starbucks drink with your tip, what this will get you introduced for, either in the futures or the spider by itself or the combo. Give that a try. It might be 2 coffees. It's not very much money, and you're going to get approximately 6 videos a week, special reports. And on my special video reports, Clients get them for free. I only give a couple of them for free to the people that come in that watch, aren't subscribers. Then they pay for them almost what a monthly subscription is. So got it worked out. IraEpstein.com, or you can move your cursor up here. Take advantage of this. I'll catch up with you all Monday morning. Take care.